Thank you for choosing to watch this video. For more videos on Palantir, please go and press the like button. Also, if you own Palantir stock in your portfolio, feel free to comment your price target down below and remember to subscribe. With that being said, let's dive straight into the video. In this analysis of Palantir Technologies, ticker symbol PLTR, I will expound upon the compelling reasons that designate Palantir as a strong buy, a stance unaffected even after a significant rally of over 169%. Based on my calculations, if analysts' estimates come to fruition, the stock could potentially rise to $49.60. To further substantiate this perspective, I conducted a secondary model, revealing that while Palantir may be marginally overvalued by 3.4%, it still holds the potential to yield annual returns of up to 18%. Therefore, I have made the determination to categorize Palantir as a strong buy. Palantir, which is a notable software development company, specializes in the field of data analytics. This involves the creation of software tailored to analyze extensive datasets, extracting valuable insights pivotal for decision-making processes. Palantir boasts a diverse product portfolio encompassing Gotham, Foundry, Apollo, and the recently introduced AIP. With each segment's functionality elucidated in subsequent sections of this video starting now. Gotham stands as a robust tool designed to uncover concealed patterns within diverse datasets, spanning from signals intelligence to confidential informant reports. Its primary objective is to empower users in identifying potential threats, fostering collaboration among analysts and operational personnel, and aiding in the strategic planning and execution of real-world responses. Gotham has gained widespread adoption across various government functions. In contrast, Palantir's Foundry platform serves as the central operating system for data, aiming to transform commercial organizational operations. Foundry provides individual users with a unified platform to seamlessly integrate and analyze data, emphasizing speed for experimenting and testing new ideas. Foundry addresses common challenges encountered in data projects by offering a user-friendly backend for constructing data pipelines, featuring a graphical interface that enhances tracking and tracing for improved comprehension. We also have Apollo, which focuses on expediting secure software deployment and updates within businesses. In 2021, Apollo was introduced as a commercial solution, enabling customers to securely deploy their software in diverse environments. Serving as a centralized control layer, Apollo orchestrates the continuous delivery of features, security updates, and platform configurations, providing a comprehensive solution for businesses seeking efficient and secure software management. Finally, the latest addition to Palantir's suite is Palantir AIP, which was unveiled in August of 2023. This innovative product is essentially a large language model that allows clients to pose questions and receive automated responses from the AI. Users can access this cutting-edge tool directly through the user portal, showcasing Palantir's commitment to advancing technological solutions and enhancing user interaction with artificial intelligence. As the name suggests, data analytics involves the processing of large quantities of both structured and unstructured data with the goal of extracting valuable insights. These insights, in turn, serve as a foundation for making informed and critical decisions. The data analytics market is poised for substantial growth, with an anticipated compound annual growth rate of 18.77% from 2023 to 2029. During this period, the market is projected to achieve a remarkable valuation of $655.53 billion. This robust growth underscores the increasing significance of data analytics in shaping strategic decision-making processes across various industries. Turning to Palantir's financial performance over the past 6 years, the company has experienced remarkable growth, boasting an impressive average revenue growth rate of approximately 42.81%. Concurrently, its net income has demonstrated a decent growth trajectory at around 12%. The company is on the brink of a full year of generally accepted accounting principles profitability. Examining profitability metrics, Palantir's margins have witnessed substantial expansion, signifying operational profitability. Notably, the operating margin currently indicates a profitable operation. However, it's noteworthy that these margins deviate from typical figures for companies primarily engaged in software development, which generally hover around 20% or more. Presently, the net income margin is at -6.93%, while the operating margin stands at 1.71%. Delving into balance sheet strength, Palantir boasts a robust balance sheet highlighted by substantial cash reserves, totaling $3.2 billion, and an absence of long-term debt. This financial strength positions Palantir favorably, allowing for potential debt issuance without compromising the integrity of its balance sheet, which is a crucial factor in navigating challenging economic scenarios. In terms of cash flow and free cash flow margin, Palantir currently generates positive cash flows amounting to $465 million. The free cash flow margin stands at a commendable 21.9%, indicating efficient management of cash resources. This positive cash flow is reflected in the free cash flow components, showcasing an increase in cash from operations, a metric indicative of sustainable and genuine growth, as opposed to aggressive cost-cutting measures. In summary, Palantir's financial health is robust, underscored by its positive cash flows, strong balance sheet, and a trajectory toward turning negative net income into positive figures. This positive shift is anticipated to further enhance Palantir's overall financial standing. Moving to the valuation assessment, two discounted cash flow models will be employed. The first model integrates analysts' revenue and earnings per share estimates for fiscal year 2024 and 2025, along with the anticipated 5-year EPS growth rate and expected revenue growth rate. The second model operates on the assumption that Palantir could grow at the projected rate of the data analytics market, standing at an impressive 18.77%. The primary objective is to ascertain Palantir's fair value by considering analysts' EPS targets for 2023 and 2024, set at $675.48 million and $783.56 million, respectively. These values are derived by multiplying the EPS targets of 25 cents and 29 cents by the 2.233 billion shares outstanding regarding their respective years. Furthermore, analysts project a 3 to 5 year EPS growth of approximately 71.9%, which will be utilized to calculate the net income for the period spanning 2025 to 2028. According to this model, Palantir presents a substantial upside potential of up to 154%, with a fair value of $49.60, surpassing even the all-time high of $35.18 recorded in January 2021. The model further suggests that the stock could potentially reach a price of $107.20 by 2028, implying annual returns in the order of 90.15%. It is worth noting that this valuation may attract skepticism, given the seemingly optimistic projection that appears extraordinary in real-world terms. In this second, more conservative model, the focus is on projecting Palantir's revenue growth to align with that of the data analytics market, standing at 18.77%. Net income is calculated using a net income margin of 43%, tethered to revenue, implying that net income will also grow at a rate of 18.77%. According to this model, Palantir appears slightly overvalued, suggesting a need for a 3.6% decrease from the current stock price of $19.50 to reach the fair price of $18.80. Despite this, the stock still holds the potential to yield solid annual returns of around 18.6%, until it attains the projected future stock price of $37.60. Moreover, if we calculate an average from the two present fair value prices of the two models, $49.60 and $18.80, we arrive at a stock price of $34.20, indicating a notable 75% upside potential. To achieve the outlined target as demonstrated, Palantir would require a net income of $675.48 million for 2023, translating to the need to generate a GAAP EPS of 20 cents by the last quarter in 2024. Should a DCF model be applied to this scenario, it would indicate that Palantir is even more overvalued than the 3.4% suggested by the second model. Notably, the stock trajectory indicates that analysts may be considering non-GAAP metrics over GAAP metrics, with GAAP metrics potentially being factored in only during market downturns. This presents a notable risk for the stock. However, recognizing the inherent non-GAAP nature of EPS and its value in better assessing a company's unique circumstances due to their inherent differences, I recommend a strong buy rating for Palantir. This recommendation is founded on the second model, indicating a downside as minimal as 3.4% and annual returns of 18.6%, which is deemed very respectable and provides a satisfactory safety margin in the analyst's perspective. Therefore, a comprehensive analysis of Palantir's financial performance and valuation reveals a company that has experienced substantial growth over the last few years, boasting an impressive average revenue growth rate of around 42.81%. The company's margins have also expanded significantly, indicating operational profitability, and its balance sheet stands robust with $3.2 billion in cash reserves and no long-term debt. Palantir's positive cash flows, amounting to $465 million, and a free cash flow margin of 21.9%, underscore its efficient financial management. Overall, two distinct valuation models were employed to gauge Palantir's intrinsic value. The first model, by leveraging analysts' projections, suggests a potential upside of 154%, with a fair value of $49.60 and an ambitious future stock price of $107.20 by 2028. On the other hand, the second, more conservative model, which ties Palantir's growth to the data analytics market, indicates a slight overvaluation, but still projects solid annual returns of 18.6%. While potential skepticism surrounds these valuations, an average of the two fair value prices yields $34.20, presenting a notable 75% upside. The conclusion is that I recommend a strong buy rating for Palantir, taking into account the minimal downside of 3.4% suggested by the second model, coupled with the substantial annual returns of 18.6%, demonstrating a perceived sufficient safety margin. However, it's crucial to acknowledge the risks associated with potential reliance on non-GAAP metrics by analysts, posing a key consideration for investors in Palantir. Thank you for watching all the way until the end of the video. If you want more videos on Palantir technologies, then please press the like button and subscribe. With that being said, I wish you the best of luck and happy investing.